John, what is the outlook for the domestic economy?
The outlook for the domestic economy is broadly favourable. Following strong growth last year, we expect GDP to grow by around 4.75% this year and by almost 4.5% next year. Similar to last year, the domestic side of the economy is likely to be the main driver of growth. We expect growth to be supported by healthy growth in employment and incomes, and support will also be provided by the boost to purchasing power from lower energy prices, favourable financial conditions and a gradual improvement in household and firm balance sheets. So with these supports broadly in place, we think that the outlook for growth is broadly favourable. However, there are some risks in relation to the international economy, and so there may be some slight downside risks to these forecasts.
And do you expect to see a rise in consumer spending?
Consumer spending grew by 3.25% last year, which is its fastest rate of growth since 2007. While some of that strength reflected a catch-up from previous weakness in spending, the main driver of the rise in spending has been the strong growth in employment and incomes. Looking ahead, we expect employment and incomes to continue to grow this year, and we expect also some boost from lower energy prices as well, so we expect that to boost purchasing power. So with consumer confidence high as well, taking all those things together, we expect consumer spending to grow by close to 3% this year.
John, in your opinion, what are the main risks that can affect this growth?
Our forecast reflects what we think is the most likely outcome for the growth of the economy, but there are some downside risks, and on the other side there are some factors which could be potentially positive. So on the downside, we've seen rising risks in relation to the global economy, and should growth in trading partner countries turn out to be lower than we currently forecast, then this would represent some downside risks to the forecasts. On the other hand, the domestic economy has performed very strongly over the past year, and there is the possibility that employment or incomes could grow more strongly than we forecast currently, and if that was to happen, that would be potentially positive and could offset some of those downside risks.